What you're looking at here is a price chart of the Dow Jones Industrial Average from 1979 to 2001. And the talk of this week's missive is Go Big or Go Broke. And it's in reference to going to the big picture, getting the big picture right. And when people don't get the big picture right, they go broke or they grow their money much, much slower. From 1982 to 2000, the stock market went up on average 18% compounded annually a year. But the average investor only grew their money 5% a year compounded annually. That's more than 3 times slower than the market went up. And the reason is because they didn't get the big picture right. That's one thing. The other thing is they traded the whole way. They traded that 18-year bull cycle. And when you trade a bull cycle, a secular bull market, you grow your money 3 times slower. So what does it mean to go big or go broke? It means to get the big picture right. And what I want to show you is what is the big picture today. From 1982 to 2000, we are in a paper asset or a paper asset cycle. You want to be in paper assets. You want to be in stocks. But since November of 2000, we have not been in a paper asset cycle. We've been in a physical asset cycle. And let me show you this. Let me pop right here. Now look at this image right here. The top chart is the Dow Jones from 1965 to 1982. And I've shown this chart many times, but I want to point out something. If you had the big picture right and you knew, because you believed in history, because you studied history, because you were listening to the story that history was telling you, that from 65 to 82 was going to be a physical asset cycle, you knew that the place to be was in physical assets like oil, gold, silver. Now look at the bottom chart from 99 till today. And I just updated this bottom chart this week. That's the S&P 500. They look pretty similar, don't they? Look at this. 50% down, 100% up, 50% down, 100% up. Now the moves are much bigger, where on the top chart you only have one 50% move, but you have some 25% moves, you have some 33% moves. The point is, on the top chart, look at this. There were 16 attempts for the Dow Jones to break above 1,000. 16 attempts, and it never happened until 1982, and it stayed above, and it's never turned back. Well, the new equivalent of Dow 1000 is S&P 1580, which is what S&P was here in 2007, and S&P was here back in 99 and 99. So it could very well be that the market goes up to 1580 this year. It's at 1400 close of today. But the likelihood of it breaking up above that and staying is extremely low. So we have to get the big picture right. And the big picture is long-term, stocks are not the place to be. Now, in my Fearless Wealth portfolio, which is made up of 4 strategies, one strategy identifies what that big picture is and identifies what to be in. And then I have another strategy called market probability that allows you to play these big moves in the stock market and avoid these big falls. The point is that these strategies are adapting to what's going on. They're not predicting, they're not saying what has to happen, they simply are adapting to what's happening. So here's the price chart of the Dow Jones. Now let's just scroll ahead. Actually, let me just change this to the S&P 500 right here. And let's scroll ahead till today. Let's just go right here till today. So here we are. Here's 2000 right here. Now these vertical lines are where market probability would have gotten you in and out of the market based on probability. That's not what I'm necessarily wanting you to see here. But look here from 2000 till today. To me, my brain sees that and clearly goes sideways. But now let me do this. Let me bring out a linear regression line and just go from November 2000, which is the market mode here. And notice the big picture is down, and then it goes flat. This is a mean reversion line or a linear regression line. But notice this. Look at that line right there. That's the overall trend of the stock market. Now you say, yeah, it's up a little bit from that November till today. But that up a little bit's up about, I'm just guessing here, I'm looking at about 10% over 12 years. That's not too good. Look at this. If you look at gold and silver over the exact same time period, and if we did a linear regression line from the same date, November of 2000, notice how that linear regression line is clearly going in a different direction. And that's what I mean about going big or going broke, getting the big picture right. Because when you get the big picture right, you get everything right. The problem is human brains are designed to think short term, not big picture, but they want small picture. They want to know what's going on each day. And I see this all the time. I see people and hear people ask me, what did gold do today? And here's a price chart of gold. And they're looking at like one price chart or one day, and they don't have the big picture right. So that's my take for this week about getting the big picture right. The Dow's going up, the S&P's going up, the Nasdaq's going up, gold and silver up for the year. Kind of everything's up for the year. The US dollar's up for the year. But the theme is what has been going up for the last decade and how long will that last? And that's what I talk about. Thanks, everybody. I look forward to seeing you at my next talk and having you listen to my next missive. You guys take care, and I'll speak to you then.